And welcome back to the Invest in Value channel. I'm Victor, and in this video, I'm going to be covering Alibaba, the big e-commerce company in China, symbol BABA. I've been an investor in Alibaba off and on for 3-4 years and currently own shares of Alibaba. I think it provides an interesting investing opportunity. I'm going to get into that, tell you why I'm an investor. I'm also going to let you know what my valuation is of this company and what I plan to do, either buy more shares, hold, or sell my shares. So I like to follow a consistent process when I invest in companies, and that process involves going over 4 key questions that I want to ask myself, get a clear understanding of, and then make a decision whether I want to buy shares, sell my shares, or just hold my shares. The first question I want to know is, do I really want to be an owner of this company? And is the industry an industry that I want to invest in? Really, it takes know-how of the industry, being able to understand the company, being able to understand what their business is about. Can I correlate their financial statements to what's going on from a performance of this company? So that's probably one of the more important questions is, can I understand the business? Can I make a good decision on whether I want to be in this type of business? And is this company in good shape? It leads me into the particular company. It may be a great industry to be a part of, but the company has to be operating well. They have to be performing well. And this is more of a grade on the management, a grade on the existing employees that are operating the company. So is the company being operated well? Next is the company have very little debt, less than 3 times EBITDA, and therefore is lower risk? If a company doesn't have a lot of debt, it's a safer bet. They're not going to go bankrupt. They're not going to have trouble paying off their debt. So I like to measure that as well. And last is, I want a discount on the stock. I invest to make money. I'm sure you do too. And I want to be able to buy a stock that either is discounted because the market doesn't like it, or maybe it's a misunderstood stock, or potentially I believe it's going to grow faster. I believe it's going to have a better, next couple of years. And I can buy at what I believe is a discount based on what I think they're going to do over the next couple of years. So what's the general story of Alibaba? And do I believe in it? And do I want to be a part of their story? So Alibaba, in the simplest form, is a copy of Amazon operating in China. The founder of Alibaba came to the United States, saw that e-commerce was really taking off, saw that it could be a great business in China, and he created Alibaba. It's a very good business. It resembles Amazon. If you go on their website, I think it's very similar to Amazon. The big difference being is that Amazon is here in the United States. It's doing great globally, especially in Europe. But Alibaba has the huge advantage of being in China. So being able to serve that humongous population, and a population that continues to build their middle class. They have the cultural, understanding of China. They understand how business gets done in China. They have all the advantages of being run by Chinese leaders, Chinese business people, to serve the Chinese market predominantly. So I think that the Amazon business is awesome. It's incredible. I'm an Amazon stockholder as well. And I also believe that the same story is for Alibaba, which is, this is a great business. It's a great business for Alibaba to serve China and surrounding countries as well as globally now. They're growing their business. They're taking ideas that work around the world and making them work for China. So I do like their story. I do believe in their story, and I want to be a part of that story. So Alibaba has a year end of March 31st, and that's the most recent quarter that's been closed for the company. In general, the company, is flat on revenue, and I believe that's a win, because we've had so much disruption due to COVID, and China really had a lot of lockdowns in 2022. So I'm sure that affected their revenues. The thing I wanted to point out is 65% of their business is in China. So really good way to play into the Chinese economy is buying Alibaba stock. They also have some international business. Their cloud business is one thing that I'm keeping an eye on. Amazon with AWS. AWS, I believe, creates most of the profit for Amazon. It's just a very profitable business. So it's good that Alibaba is also growing their cloud business, and I think that could be a real good profit generator for the company. Overall, they're profitable, which is great. Great to see that they're profitable both for the quarter and for the year. So highly profitable company. Alibaba creates a lot of free cash. In fact, they generated $25 billion of free cash in their most recent full year, ended March 31st. So 25 billion of free cash. I mean, that's just incredible. Great business, really, really strong business. What they did with that cash, they repurchased shares, almost $11 billion of shares, dollars worth of shares were repurchased in the last closed year. So the company is a really good cash generator. They have close to $87 billion of cash or cash equivalents on their balance sheet. So really strong balance sheet and a very good cash generator. How can I value Alibaba? Well, Alibaba is quite easy to value based on the free cash flows that I expect the company is going to create, as well as they're profitable. So I can look at their earnings per share. I'm going to take two methods and blend them together. Let's start with valuing the company based on the free cash flow they're going to produce. So the most current year is they generated $25 billion of free cash flow. And those cash flows I'm going to grow at 3% over the next 4 years. And then I'm going to grow them 2% into the future. Based on that growth and an 11% weighted average cost of capital, higher because it is a foreign company in China, I get a valuation of those cash flows of $272 billion is the value of those free cash flows. I add in the cash they have on their balance sheet, and I take out the debt that they have on their balance sheet as well. So it gives me my equity value of $336 billion is what the company's worth. Their market cap currently is $234 billion. So it leaves a nice discount. If you compare the share price compared to the value per share that I calculate, you get about a 45% discount using the free cash flow method of valuation. We look at earnings per share. Their earnings per share is really solid, good profitable company, using a PE of 20. And you can argue that it could be a higher PE. 20, I think, is a good conservative number. It's an e-commerce company. They are the leader in China. So I'm using 20 as the PE. If I use those factors into the intrinsic value using earnings per share calculation, I get a value of $138 per share, and their current stock price is $90 per share. So if we use that method, we get about a 50% discount. I blend the two and I take 2 parts free cash flow and 1 part earnings per share, and I get with a blended, value for the company. And I should say you get a discount on this stock of 47%. And I think it's a solid company. They make money, they grow, they're profitable, and they generate free cash flow. Year to date, the stock price for Alibaba hasn't been doing too hot. The market has been doing great. The NASDAQ is up over 30% year to date, but their stock is down 2%. More recently, it popped. It had about an 8% gain on Friday, which was really interesting. And it was mainly because the Chinese government made a decision on Alipay, one of their big, fintech platforms, and said that they gave them a fine, but then said that for the most part, investigations of Alibaba and Alipay were going away. So that relief of, hey, nothing else is coming, caused the stock to pop. So that was good to see. But in general, I think this provides a good buying opportunity. I continue to buy shares, and I'm glad I'm accumulating more Alibaba. It's not a big position for me. I have a small position and it keeps growing, but I believe it provides good entry points into this stock. All right, so let me do a recap of Alibaba. Their performance in the most current year, very good free cash flow. Really like seeing that in the company. They bought back shares with that cash, low debt. They have a lot of cash on their balance sheet, which is really good. And they really are, unquestionably the leader in the China region for e-commerce. So they have a very good business going in China, and they're growing their revenues, which is good to see. 2023, for the remainder of their current fiscal year, they're going to continue to grow their revenue. Cash flow is very good, and their profitability continues to improve. So I just see real favorable times for Alibaba in their current year. I think, going forward for the next 10 years, this is the leader in e-commerce. They're going to continue to really do well and generate a lot of free cash and profits with that business success. And this is a way to access an investment in China. It's an investment that I could put my head around. It's e-commerce. It's very much like the Amazon business. So it's a way for me to diversify my portfolio and own a company that does business in China, because I don't have a lot of companies that do that. So it's nice to have that diversification in Alibaba. All right, so let me take Alibaba through my scorecard. I definitely want to be in this industry and own Alibaba. Alibaba is a business that I can understand. I understand their performance. I understand how they operate. I understand their whole business plan. So all the things that they put up, I totally understand. It's a good industry in a country that I want to diversify into. So all those things are positives for me. Based on their performance of high free cash flow and profitability, this company has operated very well. So I like the management team. I like what they've done in the last few years. The balance sheet's in good shape, very high cash level, very low debt to EBITDA ratio. And the stock offers a discount, which is good because obviously I'm investing to make money. I'm investing to see my investment go up in value over time. And Alibaba provides a good proposition for me short-term and long-term. Therefore, I'm buying more shares of Alibaba and building up a small position I have in the stock. And we'll be doing so in the current month as well as for the remainder of 2023. So that's my video on Alibaba. Hope you found it interesting and found some things you didn't know about Alibaba. I'm going to continue to invest in Alibaba. I think it's a good business to invest into. And please keep in mind, I do these videos just to share my experience in investing. By no means is this advice on what stocks you should be buying and investment decisions you're making. Please weigh those carefully and seek professional advice if you need it. With that, thanks again for watching.